Bond King's message to the Federal Reserve: start playing Monopoly. Bill Gross says the board represents many of the economic issues we face. Paying out $200 every time you pass go, meaning floating money all over the place, is not the solution. Let's bring in Bill Gross. He's got $1.9 billion in assets right now under management. Bill, let me just ask you this right off the bat. The Fed did not raise today. There's a November meeting, there's a September meeting, and then there's a December meeting. Will the Fed hold off hiking rates until after the election because it's just too much of a political hot potato?
I don't think so, Liz. And first of all, congratulations on the 50,000 followers on tweeting. If I knew how to tweet, I'd follow you. That's very good. I think we'll hear more in August. You know, they go out to Jackson Hole, Wyoming, and have a little meeting. And at that point, I think we're going to hear from Janet Yellen in terms of what she plans to do. But that's a month away. I think we've got one hike in the next 6 months or so that pretty much is what the market is looking forward to, but not much more than that.
Are we through the Brexit storm? It seemed like flash paper. It was horrible for a couple of days, and now it's in the rearview mirror. Is that possible?
Yeah, I think it's still important. You know, I think we talked about a month ago about the importance of globalization and deglobalization, and I think while that's sort of been postponed, you know, that and the election here in the United States and elsewhere are suggesting that the middle class, you know, are hesitant going forward, if that's a mild way to phrase it. And so, you know, I think Brexit is a good indication of some problems ahead. We're just not seeing them in July, August.
Okay, so maybe we'll have a little hailstorm or two beyond what we already saw with very dark clouds back just about a month ago. Look, to this monopoly concept, where those of us who have played it, you're given a bunch of cash from the bank at the beginning to then proceed to buy real estate and solid assets, but at decent prices. But every time you pass go, you get $200. And in a way, you're making the analogy that the Fed is just throwing out lots of $200 tranches to people over and over again.
Yeah, the Fed and the BOJ and the ECB. Actually, the BOJ, the Bank of Japan, and the ECB are the biggest players now. They're purchasing, and this is hard to believe, but it's true, they're purchasing $180 billion worth of bonds per month, which is more than 3 times the net issuance of U.S. Treasuries. And so it's no wonder that interest rates are negative there, and it's no wonder that in the United States that interest rates are where they are.
It's not working unless I'm turning the world upside down, and I don't see the right side of this. We're still at very weak growth. The Atlanta Fed says, oh, wait a minute, we'll probably see 2.3% growth for the quarter, not 2.4%, because of Brexit, because of a couple of other things. At what point does the onus fall on our lawmakers to start figuring out how to deal with this and take it off of Janet Yellen's shoulders?
Yeah, I think it does, and that's what they call helicopter money, Liz. You know, beginning now, I think in Japan, certainly in China, you know, you're seeing some type of fiscal as opposed to monetary stimulation, and I know that's not necessarily in favor in Washington these days, but, you know, ultimately, once you deplete the monetary mechanism, once you are limited to the amount of money that you obtain while you're passing go, then you have to start spending money, and that's the old Keynesian solution that is frowned upon, but I think ultimately that's where we have to go.
Yeah, you're talking about infrastructure spending. I can hear it right now. All right, we're bumping up against the closing bell, but in this low or zero yielding rate environment, what is the best place right now to grow an investor's money from where you sit?
Well, I think in the Janus Unconstrained Fund, our objective is 4 to 5%. It's got a low volatility. That's what we're doing. So, so bring it in. You know, otherwise, I wouldn't advise buying treasuries. I think the yields are too low, and I think stocks are relatively high. There's a lot of risk out there, and so, you know, put it in some relatively low risk investments that reduce the return, but certainly reduce the risk as well.
Well, it's nice to see you, Bill. Thank you so much.